From the $126,000 high in October to the $59,000 low this February, Bitcoin has plunged over $66,000, a staggering 52% decline. Is the 18-month cycle decline finally over? Today, we dive deep into the Hurst Nominal Model to see if the February 6 bottom is the real deal, or if a more painful crash is lurking. Let's break down the cycles. Before we start, make sure you read the disclaimer carefully. Let's dive first into the 18-month cycle. From August 2024, the date of the last 18-month cycle low, up to this month's low, exactly 18 months have passed. On the Hurst Nominal Model, the 18-month cycle has an average length of 18.93 months. Using the past three 18-month cycles back to 2021, the actual 18-month cycle has an average of 17.6 months. Time-wise, we are currently in the time window for the formation of the actual 18-month cycle low. During my December 2025 update, I was expecting the Bitcoin market to form a low in February 2026. Also at that time, by crossing below its 18-month cycle line, or FLD, the Bitcoin market provided a $73,408 target. On February 6, 2026, with a $59,930 low, the target was met and even exceeded. By forming this $59,930 low, the Bitcoin market crossed slightly below its cycle trend line, or VTL. If the crossing is confirmed, this is very valuable information. To confirm this crossing this month or next month, the market must keep trading below its VTL. If that happens, it means the $126,272 October high is at least the 54-month cycle peak. What does that mean for the future trend of the Bitcoin market? We should expect a rebound from this low regardless, but the next peak should stay below the October 2025 all-time high, followed by a painful decline. In one 54-month cycle, there are three 18-month cycles. The first 18-month cycle is very bullish, ending well above where it started. The second one is less bullish, sometimes even neutral, which is the case for the actual 18-month cycle, as it ended very close to where it started. The third one is usually less bullish than the first two, and is very often bearish. Since the second 18-month cycle is neutral, we can expect the third one to be bearish. It is crucial to monitor this VTL. If the Bitcoin market crosses back above its cycle trend line this month or next month, we can expect a good rally. Otherwise, we can anticipate lots of volatility during the next correction. If the market forms its low this month, we can expect the next 18-month cycle low to form in August 2027, with the peak formation around November 2026. The 40-week cycle. The first 40-week cycle since the last major 18-month cycle formed in April 2025. In my January 26 update, I was expecting a possible 18% down move on its way to forming the second 40-week cycle of this 18-month period. My ideal time window for the 40-week low was the week of January 26th. On February 6th, Bitcoin formed a $59,930 low after a $30,000 or 33% decline since my last update. There is a very high probability Bitcoin formed its 40-week low on February 6th. Before officially calling the February 6th low the 40-week low, we need to wait for confirmation. Following an 18-month cycle low, we can expect a strong rally above its cycle line. From last April 2025 to February 6th, this 40-week cycle is 43 weeks long, or 301 days, 29 days longer than the 272-day average in the Hurst Nominal Model. Combining both 40-week cycles since the last 18-month low in September 2024, the length is 546 days. On the Hurst model, the 18-month cycle is 545.6 days. As a reminder, the ratio between the 18-month cycle and the 40-week is 2-to-1, meaning there are two 40-week cycles in one 18-month cycle. The time for this 40-week cycle low is due now. Before we continue, if you find this analysis valuable, please take 2 seconds to hit the like button. It helps me make more valuable videos like this one, thank you. The 20-week cycle. From the first week of September up to the February 6th low is 22 weeks or 158 days. It is about 2 weeks or 22 days longer than the 136.4 days from the Hurst Nominal Model. One of Hurst's principles is the principle of variation, meaning cycles are sometimes shorter or longer than the nominal model. When a market is bearish or in a downtrend, cycles have a tendency to be longer. This seems to be the case in the Bitcoin market. For now, the 20-week cycle does not provide much more information. The official confirmation of the 20-week cycle low will be when Bitcoin crosses above its cycle line, or FLD. This may take time, but by analyzing the shorter cycles, we should be able to see the first signs of an important bottom forming. The 80-day cycle. Let's see if the 80-day cycle helps us identify this expected long-term cycle low. The last 80-day low was on November 21st. Adding 68 days gave January 28th as a potential date for an 80-day cycle low. The Bitcoin market dropped significantly to form a $59,930 low on February 6th. If we consider February 6th as the 80-day cycle low, this cycle is 77 days long, 9 days longer than the 68-day average. This 9-day difference is within the normal range of the Hurst principle of variation. As a reminder, in a downtrend, cycles have a tendency to be longer than the nominal model. On February 6th, something interesting happened that may confirm the 80-day cycle low: very high volatility. When we see extreme volatility during a low formation, it signals an important bottom. The February 6th range was $11,743 between the $71,673 high and the $59,930 low. Usually a low formation with such a green candle and high volatility is a bullish sign. If February 6th is confirmed as the 80-day low, then, by the principle of synchronicity, it will also be the 20-week, 40-week, and 18-month cycle low. The first sign would be Bitcoin crossing above its 20-day cycle line. If this is the case, we can expect the next 80-day low on April 15th, 2026, with a peak around March 12th, 2026. What's next for the 80-day cycle? Let's look at the roadmap for the next 80-day cycle. The yellow line represents the price when different cycles are combined. Hurst calls this the principle of summation, while the blue line represents the 20-day cycle. Let's assume Bitcoin formed its 80-day low on February 6, 2026. Crossing above its cycle line provides vital information. Not only will it provide an upside target, but it will also confirm that the previous low is at least an 80-day cycle low. After forming its 80-day cycle low on February 6th, the Bitcoin market will cross above its cycle line, providing an upside potential target for the next 20-day cycle peak. Then, after forming the 20-day peak, Bitcoin will start a correction to form a low on February 24th, finding support on its cycle line. It is very important that the market finds support here. If Bitcoin crosses sharply below its cycle line during the 20-day low formation, this will be a sign of significant weakness. After the 20-day cycle low, the market will rally toward its 40-day cycle peak. To remain bullish, the 40-day peak must occur on the right-hand side of the cycle. After the peak, Bitcoin should cross below its cycle line, providing a downside target for the 40-day low on March 12, 2026. After that, the market will cross back above its cycle line for the 80-day peak target. Finally, Bitcoin will cross back below its line for the next 80-day low. On its way there, it will form a first low around the third week of March, rally toward its cycle line as resistance, and then head down toward April 15th, 2026. In conclusion, the charts are screaming high volatility ahead. If you want to stay ahead of these cycles and protect your portfolio, hit that subscribe button right now and turn on notifications. Don't forget to like this video if you found this analysis valuable. It helps me bring you more updates like this one. What's your target for April? Let me know in the comments below.